Hey everyone, it's Rob Folia, Folia Properties at Keller Williams Realty and author of Real Estate Reset. And it is the first of the month. So you know what that means. It's the first of the month market update. And today I want to answer the question, this is the best time to buy a home since when? I think it's a legit question to ask. I'm hearing some agents talk about how it's the best time in years to buy a home and all that. And while interest rates have gotten better, and I do actually think it's a good time to buy, especially considering recent market activity and what rates have done in the last couple of years. Let's answer that question. Now is the best time to buy a home since when? And let's start by looking at interest rates. That's always the first place I like to start here. And what I'm looking at right here is the Freddie Mac's reporting of the U.S. weekly averages of interest rates. This is the week ending last Thursday, June 27th. You can see it's high sixes is what they're reporting. I've always found this tends to be a little lower than what your interest rate would probably be from a lender. So I mean, in reality, this is telling me that when I say a little lower, not much. Quarter of a point, quarter of a percent, somewhere in that range. So I mean, you're probably going to be looking at if you contacted a lender today, you're probably going to be looking at about a 7%, maybe low sevens for an interest rate. But here's the thing, just looking at the 12-month or 52-week range, we're toward the bottom of the range, as you can see here where my mouse is. The 52-week low is right at 6.6%. At 6.86%, that's only a quarter of a point higher. It's almost a point lower than the 52-week high. And that's a good thing to me. It's rates have kind of normalized around that 7, and it's a little lower than what the high has been. So again, that's a good thing. Um, when we look at the 3-year trend, because that's the next one we can look at, you can see, I mean, obviously, it is not the best time to buy since a 3% rate. There's no way to sugarcoat that. We're going to talk about the inventory and all that, but there's no way to sugarcoat that when it comes to affordability. I mean, a home at a 2.87% rate, which is what it was this random week in August of 2021, is going to be more affordable than it is at a 6.86%. But at the same time, these rates are gone. Like that's history. It's something good to learn from. Yet those rates are gone. Really, I mean, you could argue it just from off the cuff, and we're going to look at inventory trends here in a second. But you could argue that right now at a 6.86% rate, you're in a better place than you were 2 years ago. Just take right here, June 23rd of 2022, high five. So we're 1% higher. But right there in 2022, that's when we were at the height of the market. I mean, this rise right here of spring of 22, that was that market where we saw 20 offers in 20 minutes, and homes were sold in next to no time, and buyers were seemingly having to give away their firstborn in order to buy a home. And that's we're not in that market right now. So you could argue that over the last 2 years, this might be one of the best times to buy a home. But let's take a look at inventory levels, because I think that's going to tell us a lot. And I've got pulled up here a snapshot of Davidson County's inventory and Davidson County's market snapshot for June of 2024. And you can see there's a couple of things I want to point out. First, new listings. This line right here, new listings are continuing to trend down, down 17% year over year. You can see from June of 22, new listings little more than 1,600. Right now, 1,152. That's a pretty massive drop in 2 years of new listings. That's telling me that supply is still low. Supply is still we're still in that desert of homes for sale, I guess you could say. But where it might help you in terms of buying a home, right here, average days on the market prior to well, in fact, let's look at this one actually. Excuse me, listing to contract. The average time from a home going to listing and starting showing to going under contract. The average time it's taking a home to sell right now, 50 days. Now, again, keep in mind that's an average. It's not a median. There's going to be things that skew it up and down, but just compare it to where it was 2 years ago, where we were at 32 days. That's telling me it's taking another couple of weeks to sell compared to what it was a couple of years ago. And I'm just seeing it from personal experience. I mean, the last two homes that I've put under contract, one had been on the market about a month. Another one had been on the market a few months, and both of those we were able to negotiate. One we're still waiting on the appraisal, but the other one actually appraised for 20 grand more than we got it for. So win for my buyers, definitely. And that's because homes, when they're sitting on the market for longer, once we go under contract, we have a little more leverage, and we have leverage in terms of the offer we write and a lot of things. One other thing though to look at before we look at a little bit more of a linear trend and try to get a real good answer to that, it's the best time to buy since when? Months of supply. Months of supply, as a reminder, as a refresher, it's that statistic that tells us how balanced the market is. Is it a buyer's market? Is it a seller's market? How extreme of a market is it? When we're at 5 to 7 months, that's considered a balanced market. Lower than five is a seller's market. Higher than seven is a buyer's. And then the further you get from that balanced market, the more extreme of a either seller's or buyer's market it is. So we're at 4.5 months of supply right now, or at least for June of 24. So that's very close, inching a lot closer to that balanced market. It's still considered a seller's market, just not nearly as extreme as it was, say, 2 years ago, where you could see 1.5 months of supply. That's the extreme seller's market, the 20 offers in 20 minutes type of market. Last year, it was still a seller's market, just still in the strong seller's market, not as extreme as it was. This year, it's a seller's market, but kind of softening to be real with y'all. Um, so just something to be aware of. So that's telling me that, like, especially this statistic right here, that as a buyer, you're going to have more leverage. You're going to be in a little bit better of a spot. I will say this though too, because I know I'm tailoring this video mostly to people who are looking to buy a home. But if you're looking to sell a home, this should not tell you that it's dire conditions by any means. This should just tell you that you need to price your home correctly and it's going to sell. I mean, that's just the reality of it, at least what I'm seeing. But let's look at a timeline here. Let's look at a couple of things from a timeline perspective, and maybe go back 3 years from a timeline, because I think, just from looking at interest rates, we went back 3 years. We've already concluded it might not be as good of a time from a rate standpoint as it was 3 years ago. But how does inventory look right now compared to 3 years ago? So you can look right here, supply and demand. And in fact, yeah, let's just stick with months of supply. We'll start there. I mean, you can see 3 years ago, it was starting to rise from this 1.5 months, but it really didn't start to hit where we're at right now until end of 22, into 23. But there's one right here that I think will be important to look at. And let's look at median sales price to list price. And I think this one's important to take a look at, because the reality is this is where we were in 22. The median, so not the average, but you take a list of 100 homes that sold, and that one right in the middle was selling for about 2% more than asking price. So on a $600,000 home, it was selling for 12,000 more than asking. And that was right in the middle. So yes, there were some that were not selling for 2% above asking on the lower end of the spectrum, but there were some that were selling on the higher end. I mean, you take a look at average, you can see, I mean, the average was 4% above asking price in May of 22. In fact, let's just stick on average, because it's a little bit more varied of numbers here going into this year. You can see for June of 24, excuse me, 98.4%. We'll round it up to 98.4%. That tells me on average, a home buyer is able to negotiate about 1.6% of the asking price. That $600,000 home, that's going to be about $10,000 off the price. And that's good. I mean, that's as good as we've seen since June of 23, where it was, basically right at 99%. And well, excuse me, it's about it's as high as that, but at the same time, it hasn't been above 100 since the rates have dropped, is what rates have gone up, excuse me. And so anyway, what I'm trying to get, and I'm kind of stumbling on some of these numbers here, what I'm trying to get at is I am seeing some favorable market conditions. I think when we couple this knowledge, seeing that sales to list is still very similar to where it's been since rates have gone up. So I mean, because we see right here, end of 22 is where rates started to hit 7, and obviously they almost hit 8 last year. But you can see from the end of 22 on, it's been pretty steady with the average sales to list being between 97 and 99%. We're right in the middle there in the mid 98s. But then when I couple that with supply and demand, and I see where it's at right now, I see that it didn't dip as low as it did last year. So like what I mean by that is, and supply and demand, in fact, when we calculate it from more of like a 3 month rolling, because that's going to be a little less jagged. You're not going to have as many of the immediate peaks and valleys. It doesn't look quite like an EKG from at a hospital. You can see that right here, supply and demand. It actually had peaked at the beginning of this year from a 3 month standpoint at about 4.5 months, and from a 3 month standpoint, it's at about 3.5 months right now. But point being, if you looked at June of 23, it was at 3 months. If you looked at June of 22, it was at 1.3 months. So you can see this trend line if you just kind of, in fact, here, let's take a 6 month rolling or even a 12 month rolling and see if we can get a little bit flatter of a line, or a little bit straighter of a line, I should say. I don't really want it to be flat, but you can see right here, the trend line's obviously going up from a supply and demand standpoint. You look at a 12 month rolling again, let's see what we've got. I assume it's going to be even flatter, straighter, but continuing to go up. Gosh, you want to say flat for a straight line. Um, but yeah, I mean, you can see right. This is a perfect example of what I was trying to get at. That you can see. I mean, from a 12 month rolling standpoint, you know, this is the highest that we've seen supply. The highest supply we've seen in quite some time. In fact, let's see if it even had been this high in 5 years, maybe in like 19. But I mean, because we were starting to see the market become more balanced in 19, but we'll see if it shows. But anyway, my point, I guess what I'm trying to get at is that what I'm seeing looking at supply and demand, what I'm seeing where interest rates have kind of leveled off. Yeah, you can see right here. It's actually sorry, not to get back. I'll get back to my conclusion here in a second. But you can see, I mean, this is the highest supply we've seen from a 12-month rolling standpoint in 5 years. That's a good thing. That's a good thing for home buyers. I mean, you take the snapshot again. I mean, even though we're seeing new listings dropping, we're seeing active inventory up a little bit compared to this time last year. You can see total inventory up 9% over this time last year. Since inventory is going up a little bit, supply is going up a little bit, rates have kind of leveled off from where they are. I could argue this is honestly the best time to buy a home since rates have risen. You're going to be, as a home buyer, you're going to be in a more leveraged position than you were previously, and you're going to be just in an overall good spot. And so, if you're curious about what this might look like, say you've thought about making a move over the last couple of years, and you're like, Rob, rates have gone up. Everybody says the market's crazy. I don't see anything for sale. Just reach out. I mean, I'm happy to talk with you about what it is you're looking for. I will be completely honest with you. If what you're looking for doesn't exist, I will tell you that. But hopefully it does exist, and we can go and begin finding that home immediately for you. Because I do think it's a great time to be looking at it. Remember, our market is always fluid. It's always going to be changing. It's always going to be adjusting. Like, for instance, if this rate, instead of being 6.86%, say it gets up to where it was last year at its peak at almost 8%. I mean, that's going to impact affordability. It's going to throw a wrench into everything. So from where rates are right now, from where inventory is right now, I could say this might be the best time to buy a home since right about here, beginning of right about here, where interest rates were insanely low, and even though it was 20 offers in 20 minutes, it was you could lock in a low payment. Anyway, I will stop rambling on the numbers, but as always, if y'all have a question about your specific scenario and you want to capitalize on this market, give me a call, 615-238-7578. Again, 615-238-7578. You can hit reply if you're getting this in your email. If you're seeing this on social media or on YouTube, drop a like, drop a comment. Happy to help however I can. Guys, thank you so much as always for checking out these videos. We'll be back soon. Thanks, y'all.